NVIDIA may be America's top performing stock after more than doubling this year alone. But if you're holding NVIDIA or thinking of buying it to get a stake in the 7 trillion AI market, you're going to want to see Mark Chaikin's new AI prediction first. Mark is a regular on many major news outlets from Fox Business to CNBC and built the stock indicator Wall Street uses to find winning stocks. His award-winning system flashed buy on Tesla before it climbed 335%, Moderna before it climbed 300%, and Riot Blockchain before it climbed 10,090%. It also found NVIDIA at the start of 2023 before its massive bull run. But right now, Mark is stepping forward to warn people to stay away from NVIDIA. My system has indicated that NVIDIA is no longer the best stock to buy to profit from AI, Mark says. In fact, it just flashed buy on a totally different AI stock. And today, he'd like to hand you the name and ticker symbol of his #1 AI stock to buy right now. For a limited time, you can get this information for free at aifrenzy2023.com. Again, that's aifrenzy2023.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show. Well, with minutes to spare, President Joe Biden signed a stopgap funding bill over the weekend to avert a shutdown and keep the government open for 45 days. In doing so, he capped a chaotic 24 hours that riveted much of Washington, but left one of the White House's top priorities, aid for Ukraine, up in jeopardy. Here to talk about this and so much more is my guest, David Wu. He's a former IMF economist and Wall Street strategist. He's also the creator of David Wu Unbound, which you can watch and I fully enjoy on YouTube. David, so good to have you on my program. Welcome.
Thank you. Thank you for having me.
So, David, I want to cover a lot of ground with you, but first, let's start with some pressing headlines here, because less than 4 months after resolving a standoff over the debt limit that threatened to push the U.S. into default, here we are again, dysfunction in Washington again. What do you make about this kicking the can down the road again, and what it means to markets? I mean, they hate uncertainty, and it's definitely giving us a bunch of it right now.
Yeah, I agree. I think, but I do think what is happening is that I think, this is going to have a huge impact on the U.S. election. Because let me tell you this, as you said, 4 months ago, we went through a similar exercise. And, the Freedom Caucus, some of the fiscally responsible-minded Republicans felt that they were betrayed by Kevin McCarthy. This is why they basically held his feet to fire this time. And guess what? He did it again. He basically got more votes from the Democrats to push through this continuing resolution bill than Republicans. And only because he stripped out the Ukraine aid. And guess what? As we discovered from Matt Gaetz, from Florida this morning, apparently the word on the street is that McCarthy had promised Biden behind the closed room that he was going to get the Ukraine money in anyway the next time around. So from that point of view, I think this is going to create a huge revolt within the Republican base against the leadership that is seen as selling out the party.
So it will hurt Republicans, you're saying?
I think it certainly will hurt Republicans. I think what is going to hurt the most, of course, is going to be Ukraine. I mean, Zelensky is the biggest loser today. There's no question about that, because now I find it very difficult to believe that they're going to be able to push through this $25 billion. Unless, McCarthy decides to turn himself into a Democrat. But I think, the big winner, I would say, is going to be Trump, actually, because I think all this is going to basically, as you probably saw already after the second Republican presidential debate, Trump's lead widened further. This is the kind of thing that is going to raise question in the people's mind, Republicans, about what their leadership is doing, about a uni-party. And I think this will only I think it's going to play out very, very well for Trump. So the big loser, basically, from what happened last night is Zelensky. The big winner is going to be Trump. And the big loser, obviously, is going to be U.S. taxpayers, because the debt is just basically ballooning, with no end to this.
Well, I mean, I think there's obviously so much pushback. I mean, would you argue that most Americans are fed up about the amount of aid that's been going to Ukraine? I mean, what do you feel the sentiment is like there?
Listen, I mean, the fact is this. I mean, this is the fact. The fact is that last week during Zelensky's visit in Washington, ABC actually conducted a poll, and this is not basically like an anti-Ukraine station, I will tell you, and they found that 40% of Americans now say that America is now paying too much to keep the war going in Ukraine. That's 40% thinking too much. So from that point of view, and then another 20% says, well, maybe too much. So my point is that there's no doubt the Americans are running out of patience with this war. The Americans feel like, you know what, the country's debt is going through the roof. U.S. own border is left unsecure.
That's right.
What business does the U.S. have to basically spend all this money to secure basically Ukrainian border that's so far away?
So David, what, in your opinion, like if Ukraine does not get this aid for the U.S., what does, how does the war play out? Is it going to be just game over immediately for Ukraine?
I think it's going to be very tough because what you have to realize this. I mean, it's pretty amazing. I mean, this war is 18 months in the making, and yet so far there's very little economic hardship imposed on the Ukrainian people. Because, I mean, in fact, I was told today that a Ukrainian soldier is paid 5 times the salary of a civilian. That's how much American money and European money is basically, buoying up the Ukrainian economy, the Ukrainian fighting spirit. So from that point of view, continued money is very important, but it's a black hole. So from that point of view, I think I can tell you I'm conducting daily survey in Ukraine, and what I'm telling you is that Zelensky's approval rating is basically taking a big dive over the past week because I think the Ukrainians started to get the joke. So I think the issue now is, what does Zelensky do? Does he blow things up in the next few weeks in the hope that, if things really blow up, that's going to force America's hand? Or that we're going to be basically going into a war of attrition where the Russians are going to start to basically come out from their defensive position to launch an actual offensive? Because if I think that happens, that's actually, in my view, not a bad thing for the market in general, because I think the uncertainty created by this war has been a drag on the global economy. If this war ends because one side is defeated, that probably is going to be an underhaul, I would say, on the margin bullish, especially for the European markets, because the European economies have been the hardest hit by this war.
David, let me ask you, you brought up the campaign trail. So let's go there. And I want to bring this back to folks because in September 2016, you made a contrarian call back in the day. You said markets were failing to adequately price in the probability of a Trump win, and you predicted that if Trump won, it would bring about a stronger dollar and higher rates thanks to fiscal stimulus. So you had been forecasting a Trump win back in the day when no one thought he would win. And this time around, you're saying he'll win?
Listen, there's no doubt. I think if it's going to be a fair election, Trump's going to win. But I think the complicating factor here is not so much who's going to basically get the Republican nomination. There's no doubt Trump is going to get the Republican nomination. Okay, history says that he will. I mean, especially given the massive lead he has over, the runner-up DeSantis right now. The only question and then by the way, on top of that, as you probably heard yesterday, I mean, Robert Kennedy Jr. is now basically declaring that he's going to run as an independent, okay, which is going to split the Democratic votes. So from that point of view, I would say that Trump is in a very good position. That is, if they don't try to kill him. I'm not going to go beyond that. I think Tucker Carlson has put it out there as a thought, as a possibility. And I certainly think after what I've seen in U.S. politics the last 4 years, I'm not going to rule anything out.
A killing. An assassination.
Well, whatever. There are ways to make people disappear or whatever it is. But the point is that to me, this is why I think the election is probably going to be the biggest tail risk in 2024.
Yeah, well, because I was going to ask you about that RFK wildcard, David. But you think he wouldn't be able to take on Trump, even if he runs as an independent. He's just splitting votes.
I don't see how he can beat Trump. I mean, I think they can work very well together as president and vice president. I mean, I think Trump will probably embrace that possibility, by the way. But the point here is that I think at this point, I think RFK is going to take votes from the Democrats. And by the way, I don't even think Biden is going to be running. I have no doubt in my mind at this point, all the Democrats are talking to basically, Michelle Obama about coming out and running to save the country. Yeah. Okay? So I think it's going to be, ironically, I think it's going to be Trump versus Michelle Obama versus basically,
and you still think,
Robert Kennedy.
And you think Trump would beat Michelle Obama? Like, I know these are a lot of hypotheticals, but it's fun to play them out and talk about them. So you think Trump would still beat a very popular Michelle Obama?
I think, I'm not saying if he was just running against Michelle Obama head to head, I think it would be basically very close. But if, Kennedy is going to be running as an independent, then I think there's no doubt Trump is going to win.
It's fascinating. I guess because I just love hearing your thoughts, because you remember once upon a time when there was so much momentum behind DeSantis. Where do you think he really went wrong?
Listen, in American politics, as you know, and I know this, Americans, they care about charisma, personality, the ability to connect with you, energy. DeSantis, he may be an okay guy, but he has no charisma. And he comes across, and he's not he doesn't look presidential. So I think from that point of view, and I don't know if it's because, again, there's a racial thing, that kind of thing. I don't want to go there. But the point here is I think DeSantis made a lot of mistakes. He went to the right of Trump. I don't have to tell you that, right? On the Disney issue, he went to the right of Trump. On the vaccine issue, he went to the right of Trump. And that's a pretty dangerous game to play. And especially given the Democrats, they're convinced it's going to be far easier to beat Trump than to beat DeSantis. So when DeSantis came out in the open to the right of Trump, the Democrats just came out, and the Democrat-controlled media just came out and destroyed him.
I don't.
So he had no chance.
I'm sure you saw the recent video of Trump speaking to the crowd, where he's basically poking fun at Biden of how he, doesn't know how to even navigate a stage, and then he brought up the fact that he has more indictments than Al Capone ever had, the most dangerous man in America. I'm sure you get asked this question: what happens if Trump goes to jail? How's he going to run then, David?
There's nothing in the Constitution that says that somebody cannot run for president or, in fact, run the country from his jail cell. The Constitution only says you have to be, born in the U.S., more than 28 years old, and then you have to have not basically fought in the Civil War. Okay? If you meet all these three criteria, you can be president even if you are in jail. Okay, so I don't think that would be an issue. In fact, if they put Trump in jail, that will make him into a martyr.
I agree full. Okay. I've been saying that for the longest time. But could you imagine the ratings of that first debate, David? Anyhow, we'll move on from that topic, because I want to talk about Pershing Square's Bill Ackman, who came out sounding the alarm on the economy, which he believes has begun to decelerate on the back of aggressive rate hikes. He says, I think the economy is starting to slow. The level of real interest rates is high enough to slow things down. I bring this up because it's a stark contrast to what we heard from Jamie Dimon just last week, saying, get ready, folks, the Fed is not done hiking, and they may hike sharply here. What side of the fence do you land on more here, David?
All I know is that Jamie Dimon is always right. Right? When the market's bullish, she said, it's going to 7%. When the market's bearish, she talks about, the market is ignoring recession. So, Jamie Dimon actually is pretty amazing. That guy's always managed to basically get the soundbite right, to get basically quoted on the front page. But my view is this. It's very simple, right? You all saw. The Federal Reserve is very puzzled by one thing. Right? This is why last week they actually revised up their growth forecast for next year, right? From 1.1 to 1.5%. They've also revised up their forecast where the Fed funds rate is going to be at the end of next year. Now they're saying the Fed funds rate is going to be above 5%, okay, at the end of next year. Now, why are they saying all this? Because guess what? The economy is doing a lot better than, they ever imagined in their wildest dream. If you look at the Atlanta Fed GDP now casting right now, currently, the economy in the third quarter was tracking 5% growth rate. That's insane. You're talking about 18 months of most aggressive Fed tightening in history, and the economy is growing at 5%. That is insanity. And then, therefore, we have to ask ourselves, why isn't the economy slowing in the face of rising interest rates? I think this is the most important question. And the reason I think is very straightforward. First of all, people haven't been paying their student debt for 3 years, okay? And of course, resumption of repayment started yesterday. Now, the question is that going to slow the economy? That depends on how many people actually are going to start repaying their student debt. I mean, I just read a few surveys over the weekend that suggest maybe as many as 50% of people who owe student debt say that they plan to boycott the repayment. And the logic goes that if we all decide to boycott, then the government will have no choice but to forgive student debt. Now, if you think these people are completely divorced from reality, guess what? President Biden is going out of his way to encourage them, because a new rule passed by the administration, 2 weeks ago, basically says that over the next year, convenient before the 2024 election, if you don't make good on your student debt payment, you won't get into the trouble. Nobody's going to come get you, and it's not even going to show up in your credit record. Can you imagine how insane that is? So, and then the president is talking up, I'm still exploring other initiatives to forgive your student debt to overcome the Supreme Court ruling. So basically, just when the economy, we need a bit of basically like reckoning, right? People haven't paid their debt for 3 years. This is time to basically pay up. I suspect nobody's going to be paying. I think you have to be a real sucker to be basically paying. So that's probably not going to bring down the economy either. Now, what about the stock market? To me, that's the most insane part, because higher interest rates, I don't have to tell you, make stocks look very expensive, right? In fact, if you with 10-year US real yields, inflation index bonds, now currently trading at 2.3%. At 2.3%, that means S&P has never been more expensive since 2003. That is in 20 years. So the question really, in my mind, is what the hell is going on here? Higher basically interest rates ought to have by now bring down the stock market, which would have tightened financial conditions, would have slowed the economy. The question really is, what is going on with the stock market? I think what's going on is that the rest of the world cannot buy enough of, guess what? The Magnificent Seven. I've been having yesterday I had a chat with a very senior Swedish fund manager. Today I had a chat with a very senior Taiwanese fund manager. They're all telling me that retail investors in Taiwan and Sweden, they just cannot buy enough of the Magnificent Seven. Because for one thing, they're now scared investing in China. Europe, it looks like it's going into recession. So all of a sudden, the US not only looks like it's least bad, but it's becoming a safe haven. And everybody says, I just want a piece of the Magnificent Seven. I don't understand, honestly, how can Apple be trading at 28 times when basically, literally, I can see a struggle to basically grow more than 10% over the next few years. So from that point of view, this is what's really happening. Ironically, this is also the reason why the dollar is strong, US stock market's going up and US interest rates going up at the same time. Because ironically, the rest of the world is in search of this, basically the mystique around the Magnificent Seven. I think this is going to blow up. I just cannot tell you right now when that's going to blow up and what it's going to take. Personally, I think the most likely trigger, a catalyst, will be like, a slowdown in the economy and all of a sudden advertising budget starts to basically get cut back.
For a stock market blow up. For a stock market, you're talking stock,
Google,
you're talking
95%.
For a stock market blow up. And hence, I was going to bring up, because you're so bullish the US dollar, despite higher oil prices, you're remaining bullish US dollar here.
Listen, there's no doubt. The US dollar at the end of the day, okay, I think there are several aspects to this. First of all, the US is more or less self-sufficient when it comes to energy. So higher energy prices hurt the US less than other basically oil importing countries. Like Europe, for example, is now a big, basically major energy importer. Japan is a major energy importer. China is a major energy importer. So from that point of view, sure, high, energy prices not good for US consumption, but it's very good for US drilling. Down in Texas, North Dakota, whatever, employment's gonna go up just because oil prices haven't gone up. So the dollar, relatively speaking, does well when oil prices go up. I think in general, the way you gotta think about this, the dollar more generally, is this. The reason why the dollar is strong is because the US stock market has been the best performing stock market in the world in the last 10 years. In fact, the US stock market has outperformed the stock market of the rest of the world 9 out of the last 10 years, which is an amazing record if you think about this. And then with very Very, very, very attractive, basically Sharpe ratio. And the reason why the U.S. stock market has outperformed so consistently is, of course, the outperformance of U.S. tech stocks because of the Magnificent Seven. And I don't want to tell you, the Magnificent Seven, they're all tech monopolies, right? So you're talking about right now, the crown jewel of the U.S. economy, a bunch of companies that don't do that much innovation, but they are definitely monopolies. And in some sense, that's what's happening right now. The rest of the world is paying rent to these big American monopolies to keep the dollar strong. That's the honest truth. And these tech monopolies, I'm going to tell you, in 2020, they became the biggest donors, the tech world, Silicon Valley, to political campaigns. They gave a lot of money to Democrats. 2022, they once again gave a lot of money to Democrats. So now, Joe Biden, who brought in Linda Khan to go after tech monopolies, so far Linda Khan has not managed to get anything done. 3 years into her job, she's not taking on Amazon. I hope she's got more luck there. But the point here is that this is where you've got Washington, big tech, monopoly, joining arms to protect the US dollar hegemony. That's the reality here. The dollar is strong because, big tech has become strategic for national security and then has become basically existential for the Democratic Party. And that is what the world is paying a huge tax on. And until somebody breaks that, the dollar is going to be strong.
So that said, because everything you're saying makes a lot of sense, David, that said, you as an investor, right, what are you doing given the situation you just presented?
I want to, listen, I'll tell you, listen, at the end of the day, I've got short-term recommendation for my institutional clients, hedge funds, we have trade of the week, okay? So trade of the week is a very important part of what I offered my institutional clients because at the end of the day, you know what? I can barely see through the next week, let alone basically 3 months down the road. Anybody, so I think you got to basically think long-term, but you have to basically trade short-term. But in terms of my sort of retail recommendation, I'm saying, real yields at 2.3%, that's like a steal. You got to basically buy some tips, okay? I think, if gold comes down to 1,800, I think that becomes attractive, okay? So I think, because at the end of the day, this current situation is not sustainable. Not sustainable to the extent there's not going to be another ChatGPT that's going to drive up NASDAQ by 40%. That's just not going to happen. We also know, even though we're not going to see huge fiscal tightening, okay, in the US, the fact is that, the new fiscal year that just started yesterday, October 1st is the beginning of the fiscal year in the US, 2024, government spending is going to be capped at last year's level. In other words, you're going to see some tightening. Whereas last year, we saw massive easing. So all in all, I think growth is going to slow. The question is what's going to pop the stock market? I personally, at this point, as much as, the world's crazy about the Magnificent Seven, I'd rather sit on cash right now. So I like basically being long on cash, earning 5%, 5.25% cash. I basically want to buy some tips because I think they look very, very inexpensive. And I think if gold pulls back towards 1,800, I think that makes it an attractive level to basically own some as well. I think stocks, just to me, are just too expensive, too toxic, too many things have to work out for the stock market to basically keep going.
Right.
High.
So for gold, you like physical gold. You're not talking like miners, like owning like Newmont Barrick. You want to buy physical gold.
I think, physical gold, it's easier to think about this because the fact is, who's buying gold, right? Right now, it's the central banks that are buying gold. China's buying gold. You know what? China is reducing. You saw last month, for example, the tick data basically showed that China further reduced their holding of U.S. Treasuries.
Absolutely. 10 consecutive
and
months
then we
of
know they've been basically buying gold every month for the last 7 months.
Right.
Right? So I think from that point of view, we're living in a polarizing world. The whole rivalry between U.S., the West, and BRICS is set to continue. This is going to be the single biggest
wait, hold on, because I
thing.
wanted to bring up BRICS. That's why I said I have so much to get in with you. Okay, BRICS, because you've gone saying their idea of a gold-backed currency is like highly, highly unlikely. But bigger than that, the bigger question for you, David, is, you're talking how the U.S. is, energy sufficient. They don't need to rely on anyone else. But look at the energy dominance of the BRICS. Is that a concern to you? The growing magnitude of the BRICS. They keep adding countries into the mix here.
You're right. The most important addition, okay, as far as the BRICS concerned, that's coming now in January 1st next year, is obviously Saudi Arabia, UAE, and Iran, right? And what does that mean? Because, if you think about this, right, in the last 30 years, right, OPEC was powerful, but OPEC was constantly in competition with Russia, right? OPEC and Russia didn't trust each other for a very long time. Every time, OPEC was going to cut production, the Russians will basically boost their production, okay? And then the OPEC and Russia started to basically make up. But then the U.S. shale oil production basically went through the roof. But the issue now is that U.S. oil production went up a lot this year, okay? I think everybody agrees at this point, the shale story in the U.S. is a maturing story. The scope for further, basically, increase is going to be very limited from the point of view of the U.S. It's going to become more and more expensive. So now that leaves you with OPEC and Russia. I can tell you the reason why Saudi Arabia has been prepared to cut back on production is because guess what? They want to see Russia win this war. Because they realize if Russia wins this war, then the whole of BRICS has an opportunity to have a bigger seat at the table. So they don't mind to see the US being taken down a notch or two. So I think what we need to realize is that, the days that the President of the United States can pick up the phone and call up the king of Saudi Arabia and said, you know what, I'm calling, basically cut prices, increase production. Yes. Those days are completely over.
Exactly.
Okay?
Exactly.
Those days are completely over. So I think this is thanks to basically Joe Biden. This is the situation that the U.S. has created under this administration. Because I can tell you under Trump, for example, the relationship between Saudi Arabia and the U.S. could not have been any warmer. The Saudis love Trump, okay? Now they wouldn't even pick up the phone when basically Biden calls. So you've got a situation where a very important U.S. ally, okay, basically who sort of determines the price of the most important resource, commodity in the whole world economy, decides that they can live without the U.S. That, I think, it's a very, it's a very foolish thing to have done.
I want to wrap with this point, David. It's basically from one of your recent articles because we were talking about the strength of the U.S. economy. And I guess despite the metrics, let's talk about what people, everyday folks, are feeling. And you start by saying that 64% of Americans think the country's on the wrong track. 64%. Even more concerning, you say, is that fact that more than 40% of Americans think that the U.S. is heading to another civil war.
Listen, there is no doubt. I mean, if you think about, I'm an economist by training. I'm a Wall Street investment strategist. I worked with the IMF. So, my training, my instinct, is very much, about economics taking precedence over everything else. There's no doubt the world's changing. Now geopolitics has become very important, but there's no doubt politics has become the single biggest driver. If you look at what is happening in the U.S., I conduct a survey, in all G7 countries that try to measure polarization. It's incredible what's happening. If you think about democracy, right? I like democracy. I like good democracy, by the way. But the point here is this democracy is a better system to authoritarianism only for one reason. Because everybody agrees to play by the same rules. That you have to trust that everybody else will be abiding by the rules for democracy to actually work. Right now, the vast majority, according to my post, I want to go into numbers here, the majority of Americans do distrust the system. They distrust the institutions. The red states distrust the blue states. What is going on right now? And then with the debt out of control. Listen, there is no question in my mind. That's why I think the American people are right that in many ways, if this polarization continues, we're heading towards a civil war. At this point, I think it's almost fair. I would say it's reasonable to assume that it's irreversible, the process. It's difficult for me to see what is going to cause Americans to come around because ideologically they become so divorced because the education, especially the woke basic ideology has become so ingrained in the left that I think at this point, I think separation in the end is going to be inevitable. So from that point of view, I think America's greatest enemy is not China or Russia, it's itself. And I think, in some sense, we can talk about how this came about, but there is no doubt the country is so polarized that I'm afraid what would happen next year in this election. If anything happens to Trump, his person, I think, the country, all hell's going to break loose.
Wow, fascinating insights. David Wu, I thoroughly enjoyed this conversation. So I thank you, and I hope we can continue it soon.
Absolutely. Thank you for having me.
Find more of David Wu on his YouTube channel, Unbound. David Wu. Loved it. Thank you. And thank you all for watching. We'll have more incredible content coming your way, so be sure to stay tuned to the Daniela Cambone Show. And don't forget to sign up at danielacambone.com so you can stay on top of it all. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.